It's the 27th of February, so only 2 days left here. And then we'll head over to March, and the new trading month is closed. A bit shorter month than usual, maybe because of February. Let's see, we got 20 trading days. March, we have 21, so that's not much longer, in fact. April should be a bit longer, maybe. I see 23, let's see, 15, 18, I see 22 there. But yeah, not much difference. Let's head over to the charts, but first of all, though, we're going to take a look at this PowerPoint, as you know. The disclaimer explaining that this information might not be suitable for everyone. Please, to get the corresponding information on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, of course, there's risk involved. Trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor, and this webinar is for educational purposes only. So by moving or by watching this webinar, you agree with the content stated here in this risk disclaimer and with the risk involved, and that you are responsible for those. So thank you so much for your attention. And with that said, today we're going to take a look at trading psychology. Now, of course, we are going to look at the charts, no worries, definitely, certainly, but we will take a look at certain psychological things when looking at the charts and put a bit of emphasis on that. So I think that's going to be interesting, maybe a bit different elements than usual if you are here more often. If you're new in here, I would like to welcome you first of all and explain that usually speaking we have these 5 steps that we look at. We're looking at defining the trend, looking at opportunities, then defining if there are any filters, establishing triggers, and then deciding when and where to enter. Usually we use fibs, moving averages, trend lines as the core of the tools and indicators. And I'll ask later. Make sure to take a look at Admiral Markets in the social media. And with that said, we can head over to take a look, first of all, at the calendar. Sorry, trying to grab the calendar. It's not working. There it is. So today we got some minor Euro news. Excuse me. GDP Spain in 11 minutes. Employment level in Switzerland 26. Unemployment change and unemployment rate in Germany 1 hour and 6 minutes. And then some lighter news. We got an Italian 10-year bond auction in 2 hours 20, USD core durable goods in the New York session, and Fed Chairman Yellen testifying, or Yellen. So, with that said, let's head over to the charts and take a look at what's going on. Euro dollar made a fall yesterday through these lines. We said, well, keep an eye on both these lines, keep an eye on the and purple for these. The line did break, and we did get a fall down to the 50 fib for some small 45 pip gain, I guess, or 45 pip fall, and then the currency went into a sleeping mode. Now the currency is breaking again as we speak to the downside, which could make sense because we are indeed making some kind of corrective movement. Now, that corrective movement happened during Asian session, so basically Asian session will normally have a correction on the euro dollar, so that doesn't maybe say much, but it is below the moving averages on this 50-minute world, which means the trend on the shorter time frames is certainly down at the moment, right? After a big consolidation, as we can see here on the 30-minute chart, a bit better, huge consolidation, the break of the orange indicating that we could see a follow through here on the euro dollar. So it is possible a break upon this 136.80, which just happened. The stop loss could be, for instance, above this top here at 136.95, for instance. It's not that big. It is breaking as we speak, so one way is entering now, the other way is just letting it break and wait for a pullback, for instance, on the 5-minute chart. Personally, I like that a bit more because, as you can see, the 5-minute world is just breaking out. It's a first break, and there's a lot of news left in front of us. So I would probably not be taking this first break. I would rather see a bit more directional guidance, a bit more follow through first. See how this break goes. It could be a false break, it could be an early break, and we get just continue with the consolidation. Maybe not, but I'd rather not wager here. I'd rather still wait for more confirmation and clues for a sustainable break. For instance, if I look at this hourly chart, we have two bearish candles and a small bear flag on the 5-minute, then the next break would look better to me, personally. Although this is nothing wrong with this break, I'm not saying. It's just that I'm a bit picky maybe, but because it is breaking this line, and we do have an impulse and momentum prior to that, so we could see this. It's just that I want a bit more confirmation. I like confirmation anyhow, so. This is the 1 hour. Let's zoom out a bit to higher time frames. And we can see that this triangle was well built. Let's take a look at the 4-hour chart. See, one of the things that could happen is we are back at the blue moving averages of the 4-hour chart. So we are in a potential support level that also has to do. That's why I'm maybe a bit more cautious. We're also more or less relatively close to the bottom of this uptrend channel. Maybe we broke through it, but if we did, it's just not it's just a big break. We can easily do this and say, okay, this is still at the bottom of the uptrend channel. So these are reasons for me to be a bit more cautious here. This break right here had potential to go back to the bottom of that channel. Now we are at the bottom of the channel, so that's why I'm a bit more cautious as well. So I would want to see a bit more follow through before taking that. This was better because we had that space right from broken trend line to the next support level and the 50 fib. And you can see how the market uses these levels to indicate what kind of space we really have when moving out of a zone. That's a blue space we had yesterday. That was an intraday short potential there. And nothing more because of that blue support at 50 fib. Now we might get followed through, but that's something that today we'll have to prove. So from the trading psychology point of view, I would say that waiting for the confirmation here helped with any particular bias that a trader has, which we can see doesn't really make sense until the market really shows us a direction. Sometimes it does make sense if we pick the bottom of something, or if we try to take a breakout, of course. I'm not saying, but we can see that waiting for confirmations can help with the psychology, right, of knowing when not to trade and knowing when to trade. Knowing when not to trade is very helpful with keeping fear and greed in play, right, in check. Fear of missing a trade, for instance, that should help. The hope of maybe the trade developing. If we're not in a trade, we don't have hope. We remain calm. We remain objective and focused, or we should do that in any case. Greed, because maybe the trade is not going our way, but we still believe it can go our way, so it's maybe a bit greedy in a way. So by having these confirmations, it helps with the psychology. It helps us with patience and discipline. Okay, so that's the advantage there. So 5-minute world is accelerating. Let's keep an eye on this. We'll go back in another 10 minutes or so to check what the euro dollar is doing. Pound is moving down as well. Let's take a look at 15. Here we're kind of in a triangle as well. We have this top line to keep an eye on. And we have this bottom line. Price is falling pretty fast on this pound. Let's see, 68, 23 pips just prior to London Open, and it's all within 1 5-minute bar. So something is spiraling this to the downside. Not sure what. Technically, we're just in a triangle here at the moment, so maybe it's just a move from the top to the bottom. we'll know soon enough. If it does break this bottom line or the top line, there's a potential for either movement here. At the moment, we're still in the triangle, though. And you can see the price is bouncing and respecting those levels. So what does that mean on the hourly? Let's take a look. We had a big momentum burst here, but we're not getting the follow through as yet. Right? All we're doing here is chopping about, which normally speaking indicates that we have a potential to make that break to the upside and break this top. But that would be the standard scenario. But this is taking long. We did have a move up here. All right. And that didn't go anywhere. It just bounced off this top and resistance, and now we had some downside and up, and now we're in the triangle. So basically how I would analyze this is as follows. I would put this orange line here, and to me it's looking like a massive impulse followed by a bull flag, and the break of a bull flag didn't get followed through. And I traded that bull flag. I'm still in the trade. I did reduce the risk because I put my stop loss below here now, and I moved it from here to there. So I did reduce some risk because, why? Because I'm getting a bit impatient, and not that impatience is a bad thing. It's just that we have to know when to be impatient, when to be patient. That's all. And this is already taking quite long, so too long, basically. So that's why I moved the stop loss, to reduce risk, because if we break out of this triangle to the downside, I don't want to be in the long anymore. So that's why my stop loss is below here, below that triangle. But to me, this is still looking like a massive impulse and a bull flag, right? A corrective pattern, and we did break out, hooked back to it, hooked again back to it, and we're making kind of another bull flag like this. That's another way of looking at it. So there are quite a lot of corrective patterns we can look at like this. All right. We got the two bull flags indicated by orange and magenta, and the triangle indicated by the purple and magenta. So let's zoom into the 30. There, that's a 30. So we zoom into that correction. So we're not getting so the question is, can we get that follow through? That is the big question. And I'm definitely keeping an eye on these two lines, because if we don't bounce now, then that bullishness is, well, the chances are getting lower and lower. If we do break above magenta, that we can have it trade up to the blue. And if we break above blue, then we have that chance to move up higher. If we break below purple, then we still have some support levels to deal with, but otherwise there could be a fall down to the 50 fib at 165. So we have some space, I would say, in here, then in here, and then here. 3 spaces. And what are those spaces? Those are basically the support levels right there, and of course the 50 fib. So that's the pound dollar at the moment. Let's see, I'll be curious how the currency reacts at the bottom of this triangle. With the current momentum, it looks pretty difficult for us to believe that it could bounce. We never know. The break here, or the move down, looks pretty impulsive though at the moment. So, but we're very close to the support levels, so personally I would be careful of that. In any case, the euro dollar, in my opinion, oh, that's really moving fast. The euro dollar looks better than the pound dollar because it already had a nice down move yesterday. So whoever was trigger happy is and jumped in that 136.78 area is already up 18 pips and is happy. Those who didn't, we can take a look together, because I didn't enter either. So we'll have to see if it, the currency always makes hooks back and retracements. So nothing to worry about that. We just had actually the hourly candle finish, and London now just opened, right, 1 minute ago. That hourly candle was bearish, and had a bearish close, and we're actually pushing through that blue trend line as we speak. So this looks ripe for a bear flag and continue to me. That's what I'll be waiting for, as I said. Now, if you're in this trade, then the momentum is on your side, so that's good. Your pound keeps inching downwards, in fact. AUD also is falling. Let's take a look at the hourly here, or maybe even, no, hourly. No. Maybe even the 4-hour. 1 hour. No, the hourly is enough. Look, we had these two lines. We were saying we have this top line. We need to break above that. Or we have this bottom line. We need to break below that. Because otherwise, the currency is just bouncing in between. And we actually had an upside here. And then this was the reversal as we started to fall and fall and fall on this Aussie. So the 38.2, although it took very, very long, remember we were talking about the 38.2 being the potential stopping spot, or at least a pausing moment. And indeed, that's the psychology of the market, not necessarily our trading psychology, but the psychology of the market indeed showing that basically we had a big resistance here that the market couldn't break, and although it took a long time, eventually we are turning here. So I wouldn't be surprised to see further gains down to at least maybe the 88.20 level, for instance, which is potential support still here. We can also put a fib on this very first down move. And what do we see then? We see that the currency stopped at the 78.6 fib. And it also stopped at the 61.8 and the 38.2 fib. So those were respected. It's always good to see if fibs were respected, just to check if the market is indeed respecting those lines. Is the market seeing the same levels as we do? That's important, right? Because if we just see a level and it's only us, then that's not good either. So the 78.6, the turning spot, and indeed the target, the very first target, is actually at the 88.96 or 89 level, which we're very close at. So that could be a bouncing spot right now. Just maybe a small one before we could continue lower to the minus 618 target at 88.46. If any of these concepts are unclear, if I'm talking too fast or anything, let me know, okay? I actually forgot to open the question box. Sorry about that. Let's see. Are there any questions? No, only Adrian is saying that he's in the, I think, in the euro dollar. Great stuff. So that's the AUD. Now, from a 4-hour perspective, we can see this choppiness even better when we zoom out, and its role in this context. Basically, we had here an up momentum, but we also had this down momentum, and we said which one is going to win. The moment, because we broke this consolidation to the downside, then there is a chance of this down momentum continuing at least to certain targets, to the next support levels. Now also, because the webinar topic is trading psychology, and some of you might be specifically joining because of that topic, I don't want to disappoint you. So if there's specifically a topic you want to meet, are curious what I think about it, let me know. By all means, I'm glad to see your questions. Okay. So I want to state that at the beginning here. You don't have to, don't feel shy or think that you're disturbing me if you ask a question. We'll gladly see that. Adrian, by the way, is in the EJ and GU. Your dollar pushing indeed. Pound 2. Let's take a look at some others, maybe like the dollar cat. Dollar cat, funny enough, not getting the continuation as yet. There's a bit of a triangle here. Let's zoom into the 50-minute chart and we'll see that triangle. There's the 15. We can see that this is a bit of a consolidation here. The question is, will we get a follow through? There is that potential because we have this momentum. Doesn't have to mean that we get that impulse though, right? Up to the next resistance, which is the green line. There is a chance, but it doesn't have to be. So we have to keep an eye on this triangle to see if it breaks. The preferred break would be to the downside. I wouldn't trade this to the, sorry. I'm totally the opposite. I mean, the preferred break is to the upside because we have this previous momentum. And we had it bounce off the 50 fib. I would not be interested in this downside break. Now, I was really talking about the potential of the dollar CAD to move up from very here, in fact, because we were at the 50 fib. So maybe some of you are in that trade. Great stuff. I said there's two ways of taking it. Early one, which is a break, is at the 50 fib, or a break of this consolidation to the upside. The other method would be wait for the turnaround and wait for the break of this top. We said yesterday. That's the one I took. So we had basically 3 options here of trading it, or maybe even 4. And you can see we did get the subsequent upside. Now the question is how much follow through can we get? And that's something we don't know. So I wouldn't do anything here. The only thing I would do is either move the trade to break even or move the stop loss to below this triangle. That's it. Because if we look at the hourly, we can see we had a big momentum here to the upside, but this could be still a corrective pattern back down to 61.8, and then we bounce up. So that's something we have to be aware of. Always have to have an idea how to trade manage it, right? To allow runners to run, but also to cut losses short. Trail stops, I think, are a great tool in that regard. The bigger picture, this dollar CAD basically stuck in between these 2 green lines, although there is definitely this big impulse, so this big momentum. So a break of this top is likely. The question is, though, will it happen from this 50 fib and this 50 fib, or will we see deeper fibs, or we move again down to this level, as I said, where I have the red circle, and then move up. And then move maybe down and build a triangle and eventually probably break to the upside. That's something that can happen. How about that dollar yen? Dollar yen, let's see. We got a small break here up to the 618 fib. That didn't go too far though. Now moving down again. So it's quite choppy in its price action. But basically, we still at the bottom of this support. So even though maybe we have some recently down momentum, it's very, very minor, and it's a very big choppy region. So I'm still looking for the break of at least this blue line, if not even this trend line here. Some of you might even be waiting for a break of this smaller. We could lose break report down. Still the same with dollar yen. Pound yen is finally breaking here. We're also in a triangle. And let's take a look at the 15. Boy, oh boy, was it flat here on the 15. Maybe the 30 minutes is a bit better. Got to be a bit careful, though, at the moment. Although we did break a trend line, we have to realize that we're also entering potential support levels here on the left. But looking, yeah, the thing is that this, too, had a lot of momentum when it may have moved down. But they all got rejected. So these 5, and even here and here as well. So we have to be aware of that. Be careful, because otherwise this is just a big, big, big sideways zone. If you're in that trade, great. Otherwise, be careful. We don't want to enter right now. Euro yen was a maybe even a better break here. I didn't look at the euro yen though. That was a nice triangle. I like this one because it was already nicely set in this downtrend. It had a break here. I like this impulse yesterday, but maybe in that regard quite similar to the euro dollar as well. So as we can see, we had multiple trend lines here. We have the green ones, the break of that was yesterday a break. We moved down to blue, bounced off blue, broke purple, and now going through to and now approaching magenta. So let's see. But this was a good break here from green to blue, just like the euro dollar. And this purple one was not that bad either. Although maybe the difference between the EJ and the euro dollar is not that big. Now, of course, from a trading psychology point of view, if you're not in one of those trades, it's always difficult because you see the break and a big momentum. And now would not be the time to start chasing it. We want to see some correction, at least on the 5-minute chart, right? Maybe the idea of fear missing more, or the idea of chasing the trade could pop into mind. That isn't a good idea now because of the bigger risk and the unknown or limited potential. It could move another 100 pips, but the chances are not too big. Right? The risk in terms of pips is about 70 maybe. That's a big stop loss for a 5-minute world. So you understand that chasing it now right in front of potential support is not a good a good trade. It's not a good idea. So those psychology elements are important to keep in mind. Just because this has moved a lot down doesn't mean that that's the best time to enter. In fact, normally it isn't. In fact, normally that's the worst time to enter. Or maybe not the worst, but definitely not the best, and probably the second worst, because of the massive risk and limited profit potential still remaining relative to the risk. That's why having trend lines is good, and taking the immediate break is sometimes useful. Not always, though, as sometimes we don't get momentum. But having this momentum confirmed, I would be looking personally, waiting and having patience, and I'm looking for a 5-minute bear flag like this and a break of the next bear flag. Sometimes we don't get it, don't get me wrong, but it does give a bit more confirmation. But it's not, I don't always do this, as I said. I do take breakout trades sometimes immediately, but it depends on the structure of the market. What I didn't like about the euro-dollar structure was the fact that we're still in this at the bottom of this uptrend channel. Now, in retrospect, it broke, but that was one of the reasons why I don't like the immediate break. And if it would be a different scenario, I would maybe take the immediate break. That's the difference. Pound dollar is in the triangle. We didn't like that too much either, although there was the potential to break this triangle, maybe this trade right in here. But we most recently hit this trend line and we're bouncing off that, as you can see. If you don't see that, let me zoom into the 1-minute chart so you can see. You see, even if it crashes, it continues to crash after that. It did respect that trend line. So that's what I didn't like about the euro dollar. What I didn't like about the dollar yen is that it's stuck in consolidation as well. But in any case, that was my reasoning. It still was a good break, as we can see here, but that's one of the things that I didn't like on the euro dollar. What else is going on? Euro odd is broke, I should say, to the upside. How does the break look like? It's very, very unclear at the moment. We do have an attempt to break above this green line. Whether that will succeed is not too clear at the moment. Still in the early phase of a breakout. We're still cautious. It does certainly look like a triangle break to the upside. and a pullback and bounce, but let's see if it has enough muscle here. Maybe in these support areas that could make sense. If price hooks back to these, there could be a good chance that this is used as support from our upside. Pound odd actually had a good break yesterday. Oh, sorry about that. Had a good break yesterday, wrong button there. This was already just an indication that we could continue higher. I was already thinking, I didn't take this trade myself because I was already in other trades, but I was thinking that that could already be a good pullback, in fact, which it did, right to the 61.8 fib. But if that wasn't taken, then you could always take the second break, which is always a bit more reliable, somewhere in here. That's not doing too bad if you were trading at that time. If not, no problems. Don't regret that. It's just one of those trades that happen more often, so no big deal. Alrighty. Let's see, what else could be going on? Dollar Swissy moving up, finding a bit of a bounce there. Kiwi still stuck in these two lines, right, that we had on our chart. Like this. Right there. So not that interesting. Kiwi's still stuck in consolidation. So most of these pairs we already discussed earlier this week, and most of them ring a bell. Let's see. Let me go to the dollar CAD here. We're at the bottom. Be curious to see what happens with this dollar CAD. I also wanted to show you pound CAD. Let's see. Pound CAD. I had an entry order just at 50. I'm still in that trade, hoping for higher targets. However, price is not moving down. Both the CAD and the pound are actually moving against me, so this is moving a bit down. I'm hoping for one more push up because the moving averages are still bullishly aligned, as we can see. So the psychology of the market is telling me, well, there's still that slant to the upside. I did move my stop loss, though, to here. So the risk is very small. Or let's say it's almost break even. So that's good. So I have nothing to lose. So I can have that patience of waiting for price to maybe bounce to this area. If not, no big deal. Now, this entire formation is starting to look a bit, could be a channel, but it could also look more like a bear flag almost. But let's see. We'll know soon enough. If it is a bear flag, we'll break to the downside. And it's good that I moved my stop loss. In the entirety, though, this is still looking like a very big trend to me. You can see impulse, impulse, and we're still above the moving averages. Price is still above the green moving averages, and the moving averages above the blue. Very simple. Moving averages are actually great tools for understanding the market psychology. Right? We have two types of psychology, or at least two types. We have the trading psychology, our traders, our own psychology, and then we have the market psychology. And moving averages are great for understanding market psychology. Right? We can understand momentum. How much speed is there in the market? We understand direction, angle, movement, flows. Right? The flow, I mean, with momentum, basically. Momentum, trend, we can understand by the fact that the moving averages have an angle or not, what the angle is, how are the moving averages related to each other, where is price in relationship to those moving averages, what is the situation of various time frames, have the moving averages crossed, or etc. So let's take a look at the euro dollar, take a fresh look at what's going on. Let's see, we approached 136.50. So we're getting a pretty good AO reading here. Now we might have divergence a bit, but I'm not sure. Let's see. What I want to see is, as I said, I'm still sticking to my plan, which is I want to see a bear flag. If we see a close in reverse here and this flies up like this and we start to see a bull flag, well, obviously that's not what I'm looking for. I would like to see a slow pace move here and have this AO on the 5-minute world go back to the 0 line. Okay? Let this correct up like that. Maybe to the 50 fib, for instance, if we put a fib on this 5-minute down move, for instance, at around 136.70. Let it hook back to the broken trend line, the broken trend channel. So that's something I would find interesting. That particular setup, that particular trade. Is that clear? I hope that's clear. Right, I'm letting this AO right out, let it turn, go back to the 0 line. Then we know that this retracement is finished. If that retracement is looking like a bear flag and it's approaching the 38.2 fib or the 50, then it probably is a bear flag because it didn't correct that that deep. And then we could expect a continuation down. It would be hooked back to this broken channel. It would be hooked back to the fib. It would be an impulse correction, and then the next break would be a good one. And we could expect a fall from 136.70 or 136.67 down to at least, I would say, 136.26. Well, depends. It depends how far this goes. It could fall to 136.40 though, that's for sure. 30 pips could extend even lower, depending on how much momentum there is today, to 136.26 or 136.10, somewhere in there. These three targets, I would say. And then we should see some consolidation throughout the night again. That's how it looks like now. We do it. I mean, unless, as I said, the other scenario would be if we don't get a bear flag, but we actually get a more aggressive up move like this. Well, then things are looking a bit differently. Then I would be a bit more cautious because it could still be a resistance spot, even at higher fibs. But I would be a bit more cautious then about shorting it. Could still be a good short, but we have to be, as I said, careful of the opposite directional movement there. Right? Basically what we want to know by waiting for this confirmation, is this going to be a range day or is this going to be indeed a trending day? What is the psychology of today? Because although we have 2 hours of downside, it doesn't mean that it has to be a trending day per se. It doesn't have to. It could be end up like this, we go up like that, and we make something like this. That's how today could end as well. We don't want to start shorting it after it starts to make a big up move, and we'll find ourselves trapped when actually the sentiment of the market has changed and the flow has changed. Now this is looking like a good momentum, I'm not saying, but I just want to see the next follow through like it's this, and then if we break, we should see a decent probability of a trending day, and that's what we want. In Tokyo opened here. So this was the initial low of the day, 136.75. This was the initial high of the day at 136.95. So we broke above below this 136.75. one thing we want to keep an eye on is how long do we stay below this 136.75. We're at the moment, we've been there 1, 2, 3, 4, 5, 6, 7 5-minute candles, which is about roughly like a half an hour, 35 minutes. So the next 1.5 hours are going to be very interesting. Because if we stay 2 hours below the initial low, then the chances of a trending day are certainly increasing. Okay, that's why I was saying look for a bear flag here, because then the market sentiment of the day is telling us that it is probably going to make that move down. All right. If we, however, within 2 hours after this break of 136.75, if we move back above 136.75, then this was probably a quick drop and rise. And I would not trust the shorts anymore. In fact, I don't want to sound too contrarian here, but we might even start thinking about some potential confirmations of longs, right? Because it could be a break of this trend line, for instance, and we could see an upside. And as Wei says, this downside could then be a stop hunt. And whether it is a stop hunt or not is something that is up to you. I mean, that everyone has their own opinion on that. But in any case, what is certainly true is that it could be, for instance, just a short downside momentum continuation, and that's it. For instance, Ray is saying we have a 200 EMA on the 4 hour, right? And I have on the 4 hour, I have my 136 EMAs that could be acting as support, for instance. So that's something to be cautious of. There's also 15-minute divergence, for instance. So that's the thing that we have to be careful of. This was a bear flag. As I said, I just didn't like the position of the bear flag towards the big trend channel, as I already explained. But that's one thing you can always keep an eye on is time factor to understand if there's a reasonable chance of this getting followed through, or if it's actually a drop, rise, and who knows after that. Maybe continue, or we could get a dip and then up again. Those would be the options, I guess. So we won't know during our session, unfortunately. This is 9:55, 8:55. Yeah, that's going to be, those 2 hours are going to be way after our session, so that's something that we'll have to keep an eye on. Now, by all means, take a look at intraday timeframes yourself. I definitely encourage that. Take a look at the initial high, initial low, and look at the daily movement after that. The initial high, initial low, by the way, mark a vertical line at the Tokyo Open. And what you want to look for is basically, depends, you have various ways of doing it, but you want to kind of see what the tops and bottoms are between that level and the next 3 hours, roughly speaking. Okay, between afternoon, the first 3 hours after Tokyo Open. That is kind of like, roughly speaking, you have various, I mean, people do it various ways, so I'm sure if you ask different traders, you'll get different answers, but just as a rough indication, these two green lines are the initial zone, right, between these 3 hours. And so that's why I have a line here and a line here. Let's see, Caitlin is asking a while back, sorry about that. Let's see, can we long 136.30 for 40, 50 pips? Yes, if it gets that far and it goes that down, it is a possibility. I would never put a pending order there though, because if we do break one more time, there could be indeed a trending day to the downside. And if there is a trending day, we never know how far the trend can last on an intraday time frame. And 136.30 could be the stopping spot. It could be 136.10 too, or 20. I mean, that's difficult to predict. So we'll have to see at the end of the day if this is indeed making a bear flag like this. All right, then does break and we get a trending day. What I would do is wait to the end of the day, close to London close, and what we should see on a 5-minute chart is we shouldn't see, for instance, like yesterday. Let me go to yesterday. It was a perfect example of that, in fact. As I say, use the time factor rule. So when you look at the chart like this, you see this 5-minute trend down. We see every 5-minute candle making a lower low. Well, almost, and if not, every candle then certainly within 5 to 6 candles, as you know, which is my rule, right? And when do we not see it? We see here 1, 2, 3, 4, 5, 6. Now, it isn't perfect because we did get a smaller break still at the bottom. That can sometimes happen of 2 pips. Be careful of that. When you get, though, a consolidation of 6 candles, then normally the next break is not too big. And indeed after that, we get consolidation and you just get upside after that. So if you're looking for a long, I would wait for this formation to happen. And then we can assume a long anywhere in that blue area with a stop loss below. Don't go right below the bottom though. I mean, give it a bit of space. I don't know. I would look at some key levels to see if there's something close. If there's a whole number, just go below there. It depends from case to case. I guess something like a 10 pips would make sense, but it depends on the structure of the market. And then you have a pretty tight stop loss because if you go 10 pips below that low and you have an entry, let's see, 1, 2, 3, 4, 5, after the close of the 6th candle, somewhere in here at 136.70, while you have something like 17 pips. So, and that could be maybe you can get some upside after that. Let's see. Zoran is asking my opinion on the Forex if it's manipulated. Well, I wouldn't say manipulated, but what I do think is that obviously the charts, I think, are communication method not only for us to interpret it, but big banks as well. Let's face it, big banks have a very big say in that they are basically, of course, have big orders, and they know where their orders are. I'm not talking about you or me, which is really not too significant on the impact of the market, but they have big commercial deals. They know where certain companies want to exchange money because of the import and export, so they have certain knowledge about that. They have an entire department full of people working on this. We're all alone, so we do have that resource disadvantage to say that in this way, right? So that's the disadvantage for us. Then again, of course, they have a very heavy footprint, so as you might know, so for them they could maybe make some money, but it's also difficult to shift around money in maybe big sums. So that's limiting them. We of course don't have that problem. So it depends. Obviously, there are a couple of big banks that have the biggest participation in the market. Whether they are indeed coordinating something, I don't think so. You never know. Whether they have maybe a certain common understanding that that maybe the market could go a certain direction, and maybe by analyzing the charts they have a certain shared interpretation, that could happen, right? Just like we could have the shared interpretation. That's a difficult question, really. I don't know. What do you think? It will depend also from trader to trader. Everyone else has their own opinion on this, of course, but ways saying that we all hope that we can shift the market. One day we will. So anyone else want to share their opinion maybe on that? Yeah, a good topic indeed, as Wei is saying, is the retail sentiment, of course, in the sense that big banks know where the orders are. As I said, they know where the flow is, not only of retail traders but also of other participants. And I don't think it's really the retail trader that has a big influence, but I do think that, for instance, certain hedge funds that have a decent weight in volume, those are still, I think, those are probably a bit more important to big banks because like decent sized hedge fund could have a couple of billion, but it's small compared to a bank, right? So those, I guess, would be interesting levels for a bank to be aware of, indeed. So in that regard, that could happen. Who knows? Retail sentiment also, you see often enough. You see, for instance, as the retail market having a certain bias by looking at a certain percentage of what the retail traders are doing, and that bias, that sentiment, is often not a good indication of what the direction will be, right? Often it's the opposite. In fact, I think I've seen studies that indeed show that whatever the retail sentiment is, that's not actually not the good direction of the market. Actually proving that the opposite side will be better, probably. So, thanks. Wei has a link of showing the bulls and bears. So you see 75% of the people are apparently bullish on AUD-USD. You see, that to me doesn't really make much sense. Because of the fact that the Aussie just broke a triangle to the downside. So I don't know, that I'm now a bit more bearish on I'm not fully bearish yet, but definitely temporarily I see potential for the Aussie to make some downside here. Now we are at a minus 272 target, so that could be the reason maybe, but we could obviously see some follow through of the break of this break of the triangle, right? So what else do we have? Gold, dollar yen is about 50-50. Well, I agree with that because it probably is 50-50 at the moment. Euro dollar, everyone is short apparently. So yeah, that's probably true, Adrian. But still, it's a good indication of what at least a group of traders think. And the point is that most of the time, whatever the majority is here, that is actually not really the direction the market is going to go to. Now, I'm sure there'll be exceptions to that, but it's just that itself, of course, is a generalization. But that's the idea. And I've seen studies that indeed show that that's often the case. I don't know exactly the study anymore or what the premises was, etc. Wei has their different link if you want to take a look at that, okay? You see, pound dollar, everyone is apparently short as well, just like the euro. So I guess we have to be a bit careful with shorting. Pound dollar did bounce here at the triangle. Let's see if we get a break of that triangle or not. And let's see if the euro dollar can stay below the 136.75 for another hour or so. That's the question. Now, in all honesty, Zoran, what our opinion is really doesn't matter, as long as we have a trading plan that has an edge, and we implement it with proper trading psychology. We trade the plan and plan the trade. We plan the trade and trade the plan. Sorry. Then it really doesn't. This really doesn't matter at all. It really doesn't matter. Actually, we can turn the fact that we have a light footprint into a major advantage, and use that to basically profit from this market as a retail trader. But we do need discipline, patience. We do need a trading plan that has an edge, and we do need to have the ability to implement that plan and implement the already. Dollar CAD is bouncing off the bottom of this triangle here. Let's see if we get a continuation. As I said, I'm in from here, although I already saw the potential for it to bounce here. So sometimes it is, sometimes it's more advantageous to wait for a more anticipating model or entry method. But I like the confirmation. So the disadvantage of that is that sometimes I enter later than I actually already see the trade. But of course, sometimes if you enter too early and you anticipate something, then you can get stuck in something as well. So let's see, anything else? Dollar yen is moving down, pound yen is still moving down. Be careful of those though. Euro yen is bouncing off magenta support, and we can see how these different angled support lines are acting as a psychology as well, market psychology, right? Pound odd that's a pretty nice trend. I wish I took this one. I wasn't trading this late, unfortunately. And I already had a couple of trades open, but I would have. Yeah, I was really looking out forward to this pound odd, and now sometimes it happens that it breaks without you, right? Just due to time factor, we can't monitor the markets 24 hours. It wouldn't be healthy, but I was really waiting for the break to the upside here out of this consolidation. I knew it was going to happen. It just took forever, and then when it broke, I missed it. So that's sometimes a bit annoying, but what can you do? What would be the target? Well, we can put a fib on this very first upside here. And we see the minus 272 target is about 187.45. So I think that there's still some pips left. The question is, will it happen immediately? And I think that's a pretty decent chance it could continue higher. We do have a pretty good angled moving averages, indicating some good momentum here on the 50-minute chart. So yeah, let's see let's see, do we have divergence here between these 50-minute tops? Let's take a look. Not really. If it does hook back to these tops right in here, I think that would be a decent chance of a bounce. We see this zone in here, tops. We see the moving averages here. That's something we can look for. We can extend this fib to maybe the top. We can see it could be a 50 fib, for instance. That could be still an interesting bounce potential to the upside. Great, Sylvia. Very happy to hear that. Thanks so much for that feedback. So that would be something interesting. Otherwise, it could continue. We could see the moving averages being used here as a support, but I don't know. Let me think about this. We do have a bit of 5-minute divergence here. Yeah, it is a possibility that we use this level already as a bouncing spot. So, either one of these two blue lines could be an interesting spot. But maybe, let's take a look at the hourly. We are getting some downside here on this hourly. Still 14 minutes to go before this closes, though. I would be more inclined to take the lower one, but the higher one could work. I would just want to see maybe price make some consolidation first before trading that, because I would be a bit more cautious with this one. Let me say it this way. Whereas this one, I do think that if we get to this zone, that there's a decent chance of a bounce there. The safer stop loss is still below this bottom, though. Now that might seem big, which it is relatively big, but that is still the safest stop loss. Anything higher is still a bit risky, because although the 50 pip could be a bouncing spot, it could be a small bouncing spot, and we continue to the 61.8 before we go up. Well, folks, otherwise, I don't really see anything else. As I said, the euro dollar, I think, is all clear. The pound dollar, too, we have these triangle. This could be a hook back from our upside here, like that. Or are we indeed going to, if we get a big consolidation, it's probably going to happen. If not, well, actually, if we look at the 5-minute charts here already, we see 1, 2, 3, 4, 5, 6. It's probably already a decent chance we will get that move up. But let's see first on this pound dollar. Euro dollar, 1, 2, 3, 4, 5, 6, 7. That too looks like we are actually the end of the impulse. So we have to see if this is a bear flag or if we move up above this blue line within 2 hours. Dollar CAD, is this a triangle or not? We'll know soon enough. Dollar yen, waiting for the break of this triangle as well. And I think that's about it for today. AUD, let's see if we get a continuation at this level for more downside, right? Because the broken support can become resistance again. That wraps it up for today, folks. Thank you so much for being here and joining me on this trading psychology session. We'll be back later tonight with looking at scaling in and scaling out. So looking forward to that topic. I think that's actually an interesting method. Of course, it is difficult. Some people don't like it at all. And there are certain disadvantages. So you need to be definitely have a prepared trading plan for that, but we'll talk about that and more details tonight. And wish you all a great day. Thanks, everyone. Cheers.